So, Sanjeev sir, I am starting.
Yes, please.
Yeah. So, hi, good afternoon, good evening to all the participants. I am Sandeep Shah from Equarius Securities. I welcome all the participants and investor and senior management to Netweb Technology India post results 2Q FY24 earnings webinar. Please note that this webinar is for 60 minutes and same is recorded. Now I hand over the floor to Mr. Sanjeev Sancheti, the head of Utus Advisor LLP, an IR and advising firm of Netweb Technologies India, to introduce the senior management of Netweb and to discuss the safe harbor statement and the flow of the webinar. Over to you, Mr. Sanjeev.
Thank you, Sandeep. Good afternoon to all the participants. It is my pleasure to introduce to all of you the senior management team of Netweb today to present the call. With me are Mr. Sanjay Lodha, Chairman and Managing Director, Mr. Hidar Vikram, Chief Sales and Marketing Officer, and Mr. Praval Jain, Chief Financial Officer and Chief Human Resource Officer. Before I hand over the call to Mr. Sanjay Lodha for the opening remark, I would just like to draw your attention to the safe harbor statement in the earning update presentation. Over to you, Mr. Lodha.
Thank you, Sandeep and Sanjeev. Good afternoon and a very warm welcome to all of you to Netweb Technologies Q2 Financial Year 24 earnings webinar. I will take you through the business and operational highlights of the quarter gone by, while our CFO, Mr. Praval Jain, will share the financial metrics. We are happy to state that company achieved strong top and bottom line growth in the quarter gone by. The total income increased by 100%, that is double year on year, and 145%, that is 2.5 times quarter on quarter, reaching 1,480 million in Q2 for financial year 24. Net profit for the quarter grew significantly by 65.9% year on year and 197.4% quarter to quarter to 151 million. Our business pipeline remains robust at 31,479 millions, with 3,496 million already qualified as L1 bids. Given our typical conversion order cycle of 6 to 9 months, we anticipate receiving most of the orders related to these L1 bids in the second half of financial year 24. On the back of our strong pipeline and robust order book of 21,174 million, we anticipate a much stronger second half. Future opportunities. As mentioned in the previous earnings webinar, we have successfully entered into a transformative license agreement with the renowned industrial leader Intel. This groundbreaking partnership empowers us to embark on a journey towards producing cutting-edge high-end computing systems based on Intel's next-generation architecture. This milestone step will help us in establishing better control over the designs of the upcoming generation platforms. We also plan to introduce low-power, RISC-based ARM architecture-based high-end computing systems in the Indian market. We believe this is a significant step forward, as it will help us acquire big-ticket cases where enterprises will comprehensively need the lowest footprint of the data center high-end servers and multiply the performance of system with more cores per watt, per power per watt. As you are already aware, in order to manufacture our products without relying on third-party entities and to expand our portfolio by offering products on new generation latest architecture from Intel, AMD, and NVIDIA, as well as the networking switches, we have initiated the establishment of our own SMT lines. To capitalize on the emerging opportunities in the generative AI and 5G space, we are expediting the setup of SMT line by installing it in a leased premises. This will accelerate our capabilities, and we anticipate that our SMT line will be operational by the end of this financial year itself. As you all may be aware, India has a significant potential to seize the opportunities presented by the growth of large language model, that is LLM models, and widespread adoption of AI across business worldwide. Mass adoption of AI in enterprise and general workloads by government and large corporates is generating very large requirements for AI compute systems. with our large deployments such as Arawa puts us in a different league and offers us an advantage so as to cater to the upcoming requirements around generative AI. In addition, fresh requirements of cybersecurity hardened computing systems, especially amid the latest successful attacks or cyber attacks on the foreign OEMs, is a big opportunity for us. As O-RAN opens up, private 5G and 5G architecture has opened up the space for us to provide our systems and solutions for CU, DU, RU, and RIC, thereby offering large business avenues for us. Adoption of private cloud by BFSI, specifically by public sector banks, is again a large opportunity for us as more and more banks are looking at private cloud deployments. Adoption of HPC in oil and gas is on the rise. Having worked on migration of workloads on HPC for India as one of the largest oil and gas company, exploring business puts us in an advantageous position to capitalize on this emerging opportunity. We are progressing well on our foray into networking switches and 5G O-RAN. Network switches plan to be rolled out by end of Q3, while 5G O-RAN is expected by end of financial year 24. I would like to hand over the call to Mr. Praval Jain, our CFO, to provide updates on the financial numbers. Thank you.
Thank you, Mr. Lodha. Good afternoon, ladies and gentlemen. Many thanks for joining the earnings webinar. I will give a brief overview of the financial numbers for the quarter before we open up for Q&A. I hope everyone would have got a chance to look at the earnings presentation and the press release by now. While our CMD has already covered the macro outlook, I will try to explain in more granular manner the financial performance of the quarter gone by. Our revenue from operations rose by 96.7% Y-on-Y basis from 737 million in Q2 financial year 23 to rupees 1,450 million in Q2 financial year 24. Gross profit was at rupees 392 million, marking a YOY increase of 71.4% and a Q-on-Q increase of 76.6%. Gross profit margin was 27%, down from 31% in the corresponding quarter of the previous year. While the margin for the quarter decreased, the margin for H1 financial year 24 increased to 30%, up from 29.5% in H1 financial year 23. This emphasizes that assessing our business on a quarter-on-quarter basis may not be or may not provide a holistic perspective. An evaluation based on the overall annual performance would offer a more accurate reflection of our progress. While the GP margins stood at 30% for H1 financial year 24, this was due to some high margin orders that executed in Q1 financial year 24. Hence, as was explained in the previous earnings calls, to margin over the year should or will average out to over 27% around. Operating EBITDA increased by 43.8% to 192 million in Q2 financial year 24. Operating EBITDA margins for the quarter contracted by 488 basis points year-on-year at 13.3%. However, the operating margin for H1 financial year 24 declined by only 231 basis points at 13.6%. This reduction was largely due to the impact of ESOP charge to the tune of rupees 70 million in the current half as against nil charge in the corresponding period of the previous year. While the gross profit margin will even out over the year as stated above, we expect EBITDA margins to be in the range of 14 to 15% due to operating leverage which will come into play. Profit after tax for the quarter increased by 65.9% Y-on-Y basis, reaching to 151 million, and PAT margin for the quarter was at 10.2%. Return on equity fell from 56.9% in Q2 financial year 23 to 17.4% in Q2 financial year 24 due to increase in the net worth on account of IPO proceeds coming in. However, the ROE for the quarter has improved on Q-on-Q basis by 72 basis points in spite of the increased net worth on account of IPO proceeds, driven by a significant increase in profit after tax. Similarly, the capital employed demonstrated an improvement of 323 basis points percentage on a Q-on-Q basis, rising to 22.3%. During the quarter, net debt significantly decreased to negative 0.3 million as compared to 239 million in Q2 financial year 23. Kindly note that this net debt calculation excludes unutilized proceeds from IPO. Net current assets increased to rupees 3,362 million in Q2 financial year 24 as compared to 1,127 million in Q1 financial year 24. This increase was primarily due to unutilized IPO proceeds lying in bank deposits. The cash conversion cycle in Q2 financial year 24 improved to 108 days, down from 140 days in Q1 financial year 24. This reduction was largely due to the reduction in receivables by 59 days, inventory by 73 days, partly offsetting by reduction in creditors by 100 days. We continue to remain focused on our strategic priorities and growth pillars, laying emphasis on our long-term goals of sustainable growth and profitability. On the back of a stronger quarter, coupled with a robust order book and business pipeline, we are extremely confident of achieving strong revenue and profit growth in the current financial year. With this, now I hand over the call to Mr. Sandeep Shah to take it further from here. Thank you.
Yeah, thanks, Mr. Praval Jain. With this, we come to the end of the opening remarks. We can now open the floor for the Q&A. Participants, request you to all restrict to 2 questions in the initial round, and for more questions, request you to join the queue again. Participants, whoever wants to ask question, please press raise hand icon on your screen, and once your turn comes, unmute yourself, announce your name and company name first, and then ask your questions. Once you get the reply to your question, please lower the hand icon on the screen. Also, sincere request to all the participants, if you are not talking, please remain on a mute to avoid the echo on the audio sound and or enable proper hearing to the audio sound. Participants, please raise your hand icon to ask your question. So I think we have a first question from Renu Baid. Please go ahead, Miss Renu Baid.
Yeah, hi, good afternoon team, and congratulations for strong results. Numbers seem to be exactly on line the way you had guided for. So to start with the first question, can you share some more details and inputs in terms of the large order pipeline? The large orders that we have in the backlog today, and how is the pipeline for these large ticket size orders looking for the next 6 months? And typically the way you would earlier share, what is the kind of overall order pipeline from government and private sector orders that you are looking over the next 12-15 months for your business? That's the first question.
Thank you, Renu, for your question actually, and definitely we will always try to strike by whatever we promise. The idea is that, so basically, as regards the order book is concerned, the order book has seen a considerable jump. So basically, the currently order book is somewhere around 217 crores approximately, okay, which was basically earlier used to be less. But actually, as I told you, our company cannot be judged on the fact of the order book because order book conversion cycle is quite good. Actually, in our case, what happens is that between 12 to 16 weeks, we are able to close the orders. Okay, correct. So basically, we are a pipeline-driven company. So our pipeline currently stands off as somewhere around 3,100 crores, little more than 3,100 crores approximately. Out of that, somewhere around 350 crores we already L1 actually. Okay, and so we feel there is a very, very robust pipeline already. We have already achieved 204 crores approximately in the last quarter. We have already an order book of around 270 as on 30th September. and basically which will definitely get built out this I particularly in this quarter itself. And plus basically we will have since basically we already have one in 350 crore. So basically other than that also we have a robust pipeline. So we are very basically I can tell you we are very well on the track so as to achieve our basically the growth CAGR which we have predicted, and to achieve the ultimate objective of around 600 crore plus, which we are targeting for the year end actually.
Sure. Any large ticket size orders sort of typical those 100 crores kind of project size that we have in pipeline or that we are already L1 on?
Basically, actually, I am not suppose, I don't think we should, but basically there is one very large order from ISRO, which we are already working upon. We are already L1, we are expecting it any point of time. And basically, we have already won an order, basically from one of the India's largest security agencies actually. That is basically certain, which is already there actually in the order book as well. So we have large orders actually coming in even from the enterprise segment. We are seeing a lot of traction from the enterprise segment as well as the government. So basically as regards business is concerned, we have a really very robust and a very good funnel as well, which gives us complete confidence of achieving our numbers without any problem.
Got it. And so my second question is, if you look at the new product pipeline on which you are working, right from switching devices for telecom sector domestically in India under Make in India program, and the devices for 5G private operators, private operator applications. So what kind of opportunities you think could translate in terms of revenues for these businesses in the next 2 to 3 years? And how is the ramp up on the export portfolio with these specialized equipment that we are working through?
Great. So basically, as regards our product line is concerned, basically it's ever growing. Actually, what happens is that we, as I already mentioned on the opening remarks, we have been basically working on the Intel new generation chipsets, and basically in this technology domain, people who come with the newer technologies always get more traction because the performance is better than what the earlier products were. So people, our kind of customers always want to focus on that. So we will have our new servers, new designs are almost already, and basically are almost already to roll out as regards on our server side also on Intel platforms, on AMD platforms. As I already mentioned to you, we are working on a very good, basically, on the product designs with AMD, with ARM actually, which is with NVIDIA, which will be really a game changer. And you know how basically generative AI is gaining traction, and how basically generative AI, basically India is also having a lot of basically getting a lot of uptrend, primarily from the business potential with generative AI is generating for the country at this point of time. So basically, there is large infrastructure installations which have been planned by all the major vendors all across. There has been a lot of noise in the market, so we see that is there. Other than that, networking switches, as I told you, it's basically has got a very robust growth, and our products are about to be launched anytime this quarter itself. We did a very good show with the India Mobile Congress. Our booth drew a lot of attention, and basically we had a large booth there, and even the telecom minister, he also visited us, and he was very much interested in promoting our products as well. So basically, we were showcasing our Make in India complete O-RAN solution with our DU, CU, and everything integrated. So we have generated a lot of interest around that. As this market is evolving, we feel that definitely we will get good traction around that. As regards export is concerned, definitely we are on track. We are already working towards that. The new unit which we are setting up is under the tax exemption zone, so that will help us so as to basically export easily. So that is also being done, and plus basically we are already in the process of exploring various markets, because we see all these products have got good traction outside, and you can very well understand under the current geopolitical situation, I think India has got a better place, and basically acceptance of Indian products and solutions is also higher. And since basically the pressure on delivery for India will be there rather than the other countries.
Right. Sanjay, just to interrupt, your explanations are pretty elaborate, and thank you for that. Just the number that I was looking out for is for the two new product segments, 5G O-RAN solutions and networking switches, which you're planning to commercially launch by second half of next year. What kind of revenue potential do these two new product lines or segments could be in your view from a 2 to 3 year perspective? So do we have any number that how large could be the networking switches profile for us from a 2 to 3 year business once it kickstarts? Or similar for the 5G O-RAN when we do on project basis with other EPC system integrators for overseas markets or so?
Yeah. So basically, as regards I just like to basically correct. Basically, networking switches are being launched actually this quarter itself. Okay, and basically 5G O-RAN should be launched by the end of by March approximately 24. So basically, definitely the product launch is all expected to be done within this year only. We want to do it. As regards basically networking switches revenue, we definitely have projected a revenue basically somewhere around I think 15 to 20 crores approximately this year. Okay, and as regards 5G O-RAN, definitely as it is being launched during the end of the current financial year, we are not forecasting any particular revenue this particular year, but definitely next year, since you are seeing the way 5G adoption is happening, and basically since Make in India has got again a significant, we will get a very good head start there also, and plus basically international acceptance of the product also. So we feel will be higher. I feel definitely these will occupy a good space in our total revenue. But at this point of time, I'm not like to really comment on that. But really, you can very well understand that the other areas we are working are also growth areas. So basically, they will increase their total size in a product portfolio.
Got it. Thanks much and best wishes, sir. I'll get back in the queue. Thank you.
Thank you.
Thanks. So we have next in line, Ms. Parv Jain. Go ahead, unmute yourself and ask question.
Hi, sir. I am Parv Jain, an individual investor. Sir, on this Intel partnership, can you please throw some light on what exactly are we partnering for and what is the incremental outlook we can see from this partnership?
Actually, Intel partnership is primarily around basically what happens is that the new generation chipsets are being developed regularly. So basically, we have partnered with them so as to basically help them. So basically, design the servers of the new generation architecture which is being announced. So basically, we already have the design team in place, and basically we have increased since Intel wants to focus more on the local manufacturing of the units, as well as basically take it across also. So on the Granite Rapids and the new platforms, we are all working with them so that basically we have the latest state-of-art platform ready, maybe if not earlier than others, but at least in time with others.
So we are developing an architecture for that server. Is that so, sir?
Come again?
We are developing an architecture.
Yes, actually what happens is that we get the chipset designs from them, and then basically we develop an architecture completely looking at our user requirements. Okay, like basically our servers are primarily designed for supercomputing needs, for cloud needs. So accordingly, the kind of basically the bandwidth, the kind of networking, the kind of memory bandwidth, the kind of basically total the PCI Express bandwidth, those things are needed. Then accordingly we design our products based on that.
Okay, sir. And what is, how much are we seeing in monetary terms this can be converted into, and the outlook by when we can see this flowing in?
Yeah, actually, basically what happens is that currently also, if you really see in the total market also, in the server market, I think more than 70% of the market is being occupied by Intel actually. So definitely, since we have an early access and since we will be ready to launch with our products in that, we definitely feel this will be very, very instrumental so as to maintain our growth rate.
So any figure, any estimated that you can throw for this?
I told you basically if we are projecting a growth rate of around 40% CAGR, and basically definitely Intel servers are a major part of it, because basically I don't want to really commit that what will be the competitive scenario, because we are working equally with all the major technology providers. But basically, since Intel has got a major share in that, so definitely it will help us so as to make our growth very, very robust.
Yes, sir. Thank you. I'll come back in the queue.
Thank you.
Thanks. We have next question from Ashish Rawat. Unmute yourself and go ahead. Ashish, you are not audible.
Am I audible?
Yeah, now you are audible.
Thank you, Sanjay ji. First of all, congratulations, robust results for this quarter. Sanjay ji, my question is that you have given the approximate turnover of 600 CR plus. Is this including the new SMT line and the switches manufacturing?
Yes, this includes everything actually. Basically, the SMT line will be on only by the last quarter actually. Actually, we had projected at the time of the IPO that this will come online by 25 actually. But since we are trying to work on several projects, so we wanted to speed up this process because they are basically we're working on various designs and we are really overwhelmed with the kind of response we are receiving. So we really tried to fast track it and we wanted to set this up ASAP. And since our designs are very confidential to us, we also don't want to share it with third party. So that's the reason basically I think the SMT line will be coming in production only by sometime late February or March actually. So we will not be able to take much benefit out of it within the current year, but still basically because the current setup itself will be giving us the turnover which I have projected.
All right, sir. Thank you so much and best of luck.
Thanks. We have next question from Vimal Gohil from Alchemy. Unmute yourself and go ahead.
Yes, sir. Thank you for the opportunity. Thank you, Deep. Sir, my question is on working capital. Very encouraging improvement over the June quarter. Just wanted to get a sense on how should we see this improving further going ahead. What should be our receivables, etc. How are they trending as of September, October? Maybe if you can give us some sense. Thanks a lot.
So, our cash conversion cycle, if you will see, that has improved from 140 days in June quarter to 108 days. And going forward, we further see little bit improvement which can happen in it, and it can go in the range between 90 to 100 days. So that is the optimal range in which our working capital or cash conversion cycle will move around.
Understood, sir. Thank you so much. That's all from my side.
Yeah, thanks. We have next question from Jyoti Singh. Please unmute yourself and go ahead.
Yeah, thank you for the opportunity and team, congratulations on the good set of number. So first question on the other income side, if you can explain why it is so high on both Q-on-Q and year-on-year side.
So this is basically of the IPO funds which have been invested in FDRs. So the return from those funds have been translated into other income, and it is high for the quarter, and you will also note that it is higher on the H1 side.
Okay, thank you, sir. And the next question on the H2 side. So we are still expecting good numbers on the H2 side, and also we will be having any impact of furloughs during Q3.
Can you repeat, please?
Yeah, leaves.
No, not in our type of business. There is no impact of furloughs, and whatever has been, I think so, given guidance on, that will come in.
Yeah, actually, I mentioned to you, basically, if you see a historical year where also 1/3 of our business comes in the H1 and 2/3 of business comes in H2 actually. That is how it has been always been progressing the same way. So we are very confident of having those numbers, and our order book, our pipeline really basically shows that as well.
Okay, thank you so much, sir.
Thanks. We have next question in the message box. The question is the partnership with Intel exclusive to Netweb, and how will this help Netweb in its growth journey?
Yeah, actually, basically, I cannot say that any partnership is exclusive to Intel, but this agreement is the agreement which we have entered with Intel. That is particularly on the server design transfer part. So that definitely that agreement only covers us very clearly, but they are free to have agreements with others also. But at this point of time, as you know, we are the only Indian OEM into this domain. And so basically it's a very good choice for Intel to have us here. That is there, and basically it will help Netweb, as I mentioned to you in my earlier question, around basically you see of the entire server space, around 70% of market is still, they used to be 90%, but at least 70% of the market is still basically based on Intel. So definitely once we have a very good latest design roadmap on Intel, that will definitely help us, because you can understand that once and somebody wants to have a cloud or a supercomputer, definitely the one who has the latest technology, that will save power for them, that will save basically the total footprint is also low. So there are more and more regions for customer to buy that. So basically I think that will really help us, and that will really fuel the growth which we are projecting.
Okay, thanks, Mr. Sanjay. We have next question on the message box from Vidur Chabra. What are your employee hiring plans? Are they specialists or they get trained in your facilities? Also, what is your approximate current employee count?
That's probably answer it, yeah.
So, for the H2 part, we have approximately hiring plan of around 70 odd people. And they will be a combination of specialists, and they will be trained on site also. Our current manpower is around 300 counts.
So, Praval sir, you mentioned that in the second half you will recruit another 70 employees.
Yes.
Okay. I have third question in the message box from Sanika Khemani. Hello sir, I just want to know what is the revenue growth guidance over the next 2 to 3 years.
So in absolute numbers we cannot say, but our revenue growth will be something in the range of 30 to 40% CAGR growth.
You mentioned 35 to 40%.
30 to 40%.
Okay. Participant, if you want to ask question, please press raise your hand icon. Sir, this is Sandeep here. Just my question is, when do you plan to introduce the ARM-based server using the RISC architecture? And is it, you believe the growth opportunity through large language model still far away, may be realized in FY25? Are you getting some inquiries from some of the enterprise clients in India on the ARM-based server and the LLM models?
Yes, Sandeep, actually, as regards answering the first part of the question, the design work is already started. As you know, there are very few OEMs who are currently primarily trying to work on the NVIDIA's ARM-based architecture. They are among those, and there is a huge demand around it, because you can very well, you are aware how the traction for generative AI has built up. You see all the major data center providers in the country all are gunning so as to have a setup on LLM. There were a lot of press releases in September from basically various all the major data center providers or the ITS companies in the country, or even basically large ITS companies like Infosys and all. They are all trying to set up their own generative AI basically test labs and all those kind of things. People are trying to set up infrastructure for that. So I think the market is really waiting for that, and there is a huge demand. So basically, NVIDIA is not even able to provide the chipsets also. So definitely, to answering the first part is that is there, that the demand is there. As regards our products are concerned, we are definitely working on that at this point of time. I personally feel it should be launched by sometime, maybe Q1 this year. Yes, for Q4, end of Q4 this year, or early Q1. We are trying to do it for Q4 this year, but basically I cannot promise you that. It may be Q4 this year or Q1 next year. So that should be there, but the earlier we come, the better it is for us.
And Sanjay sir, just a follow-up, here also everything end-to-end design of the motherboard would be done by us.
Yes, it's already started. The process is already started. The end-to-end complete thing will be done by us.
Okay, fair enough. We have next question from Debashish Mazumdar, who is from Motilal Oswal Mutual Fund. Go ahead, unmute yourself and ask question.
Hi, Sanjeev ji, and hello team. Brilliant set of numbers. Two questions. One is little cliche. The first question is, if I see the H1 numbers, the growth would be upwards of 45%, and you are indicating better performance in H2. Just to try to get some sense that broadly, will you be able to end this year with more than 40%, 45% kind of growth? What is the visibility that you have? That is the first question. And second question is, when last time we discussed, we have spoken about a large order from a PSU bank. Any update on that side or any incremental order pipeline that you are seeing in the private cloud space from the banking sector in India? And the third question is, you have multiple segments, obviously high performance computing, cloud computing. Which are the areas you see more structural tailwinds today in terms of your growth trajectory? So these are the three questions I have. Thank you so much.
Yeah, regarding your first question on the full year guidance. So as we told that our revenues in H1 is around 1/3 of the total year revenue. So 2/3 of the revenue is yet to come for the full year. So we have already close to 205 crores. So the path is clear of achieving our numbers, what we have said.
Yeah, and addressing, can you repeat your second question again?
So the second question that I had was around your private cloud order from PSU bank, which there was in the pipeline, whether you got that already, and is there any further pipeline of private cloud from Indian BFS space?
Yes. So basically, one is that we have got one of the orders actually. Okay, and the others are in the pipeline. You see the order book, Devashish, you might have seen the order. If you basically track us properly, you see the order book. Order book is 217 crores already, almost a double of what it was last quarter actually. Maybe
Correct.
I think
Correct.
even more than that. So basically, that itself is a real testimony which is showing that. Plus the funnel is also there, and plus basically we are seeing a lot of traction from the PSU banks. Some of the orders have come, some orders are in the pipeline, but definitely I eventually tell you all the public sector banks will be going sooner or later on the private cloud, because that is the journey forward. And basically we are very, very well geared up just to take care of the same. You had a third question also, Devashish.
Yeah. So before going to the third question, another point that I have noticed that your order book has increased significantly. Despite that, your pipeline or funnel is also up. So my sense is that you are able to, despite large order wins in Q2, you are able to replace the funnel with further large orders. Is my understanding correct?
Yeah, yes, right, actually.
And third question that I had was, you have multiple segments like high performance computing and private cloud, in some business with government, some business with private. Which are the areas you see more structural tailwinds today? So if you can answer that, then I have one more question.
Yeah, I will put that question to Hriday to answer it for you, Devashish.
Yeah, please. Hi, Hriday.
Repeat the question once.
The question that I had was, in the multiple segments reporting that we do, high performance computing, private cloud and stuff. So which are the areas where you see the maximum structural tailwind today? I'm not talking about this year or next 6 months or something like that.
Structural what?
Structural tailwinds, structural growth. Where do you see the maximum growth?
See, we have always been saying that, there are two major pillars in our case. One is, the supercomputing part, and second is...
Hriday sir, sorry to interrupt. Can you speak closer to the mic or slightly loudly?
Yeah, actually, what basically, I'll try to answer it, maybe Hriday can basically say that. So basically, as regards, if you really see, as basically our, if you see the revenue kind of split which we give, The HPC and private cloud, these are the two large pieces for our business, and they have remained a large piece for our business. We have been constantly telling it from the point of time of IPO itself that both are growth areas. Supercomputing is growing and the cloud computing is growing. So definitely basically problem wherein basically all the segments we are there, they're all growth segments. The other segment which we see will grow is basically the AI segment actually, which we'll see which will grow. But what happens in our case is that all these segments are also very, very closely related to each other. AI and supercomputing is also very closely related to each other. So in nutshell, what I will say is that I feel that they definitely HPC and private cloud would be the leading segments for us. And basically AI and the services will keep on boosting, and they will be slowly increasing their share in our total portfolio. I think I'm right, Hriday?
Yes. So, one question is that this high growth trajectory that we are following, and my understanding is we are working in a space where manpower availability in India is a very tough challenge. So, what is your plan around that, and do you getting sufficient manpower to address this growth opportunity in this industry?
Because if you are seeing that we have 70 people with my CFO and CHRO mentioned that 70 people we are going to employ. We are already a strength of around 300 people. So approximately you can say that around 30% more people will be employing in the next half actually. So definitely we want more people. Definitely people has been the major challenge. We went IPO only primarily for the purpose of basically the main purpose was to get and to have to attract talent. And I think that we are trying to achieve that goal. And definitely, I will never like to say that manpower is not important. Manpower is the most important in our journey, and we are doing everything so as to basically attract the right manpower for us. Only thing is that you need to have confidence in us.
No, sir. So the question was not around confidence. Question was, are you facing challenge in getting the proper manpower available? I was not doubting that you will be hiring people. I was doubting that, see what happens is we may plan a very long growth trajectory, but what happens, some challenges may come which is not under our control. Here, in case of us, manpower availability could be one challenge which can come from an external this thing. So that is what my point was.
I understand your point. Actually, really speaking, that is the challenge which I want to face. And plus, basically, if you see my total trajectory also, you will feel that basically whatever growth trajectory which we are forecasting, that is completely very well, because I told you we already, whatever I committed, we tried to deliver that. Okay, last quarter we delivered it. Next, basically, I'm already, we are around 200, which my CFO has mentioned to you, 205 crores we already did. We have an order book of 217 crores as on 30th September. Okay, and basically, you see the kind of pipeline is there actually, which is being added. So basically, whatever growth trajectory we are saying, we will definitely achieve it. Definitely, the new product lines and all the things which we are trying to do, they will definitely add to our year. But we want to be conservative in basically mentioning that kind of things. We really want to basically give a very reasonable statement to the market, so we don't create over expectations. So manpower is definitely a challenge, but basically we are addressing it very well, and our basically going public, getting listed is also helping us in that journey.
Great. So one last question, if I may. If you see that government is very active in restricting import of hardwares, laptops and everything. I understand that we don't play in the area of pure hardware. We are a end-to-end integrator. So how do we kind of think of addressing this opportunity? Because my sense is there is a very big opportunity to play. So any thoughts around that?
I'll let Hriday answer it for you.
Yes, definitely. Actually, we have always been ready, to take up the challenge, to take up, the requirements which are coming up. So, I think we welcome the opportunity with open arms. And since the capability has been into our system for very long, and we have been producing results, so market is also, especially the government enterprises or even the private enterprises, both are, looking at us to serve them with these solutions and even with the, as and when required, the hardware-based systems also. So I think we are ready we are geared up to take up the challenge. So definitely it's an opportunity for us. And by the way, laptop, desktop is not the space where we are active. So just to, precisely answer your question, the area where we can take an advantage of the current situation is where the, the restriction has been imposed on the server side. So there we are seeing a lot of potential for us to grow because, our solutions and systems will go into those areas.
Sure. Great. Thank you so much for answering my question and I wish you best of luck.
Thank you.
Thanks, Debashish. We have a follow-up question from Jyoti Singh. Unmute yourself and go ahead.
Yeah, thank you for opportunity once again. So, sir, my question on the margin side. So, just wanted to clarification that we have guided now 14 to 15%, which earlier we were targeting 16 to 17%. Just to clarify.
Operating margins have gone down because of the ESOP cost, which you will EBITDA margins, if you will see, has gone because of the ESOP cost. And on the gross margin part, we will hover around 27% as we committed during the IPO also. And you will see the year-end margins, gross margins will hover around 27% around.
Okay, thank you, sir. And sir, another on the PLI scheme side, that 2.0 that we already applied for it. So, are you seeing any progress on that?
Yeah, PLI 2.0 basically is under active consideration with the government. And as you might be aware that we have been offered a red carpet into that scheme. Okay, and basically Netweb, I think, is one of the beneficiaries which will get the maximum benefit because our base year doesn't change there. The base year targets will remain as 2019 actually for us. So that's a very positive factor for us. And basically, I think any day government will be announcing the list of the awardees of the PLI.
Okay, thank you so much.
And just to add on to that, the incentives in PLI 2.0 is much significantly higher than, PLI 1.0. And that's the reason we have migrated to 2.0.
Great, sir. Thank you, sir.
Thanks. Just a follow-up to actually have a PLI 2.0. I think we have to claim PLI 2.0 next year, right? We can't claim this year.
Yeah, for this year, whatever we do, we will be filing our claims next year.
So the claim will be for the year 2024, but the filing will happen in 2025. And so far we've been accounting on the basis of the filing and not on the basis of the accrual year.
Okay. So in that scenario, sir, there won't be any credit in the P&L account related to PLI in year of FY24, right? Because we are migrating to 2.0.
You are right.
Okay. We have next question from Ashish Rawat. Please unmute yourself and go ahead.
Sir, my question is about 5G and 6G. Are we looking for any revenue opportunity regarding to infrastructure in 5G and 6G? Because you have recently participated in this recent exhibition in the Pragati Maidan, I think. So this is my question.
See, Ashish ji, am I right?
Yes, yes.
Yeah, Ashish ji, basically, the best part is that the way ORAN has, opened up the market for us, that is something which is, helping us to build avenues for us to, have business. So definitely in the ORAN, where we are going to contribute to the 5G infrastructure and definitely the private 5G infrastructure, both are the opportunity just for us. And since private 5G and 5G both are catching up, the customers, the organizations in the country are catching up to adopt this. I think by next financial year, we can start seeing the business model getting built up around that. But we are ready to, serve our customers, and we are always, already working with certain large organizations to build the RFPs, and we are guiding them how to opt for private 5G or even, to provide 5G cloud for to the large telcos. So all those discussions are already going on. But yes, FY25 will be the main target for us, wherein we can start, encashing the 5G stack for us.
All right, Hiraji. Thank you so much.
Yeah, we have one more question in the message box from Vidut Chabra. Is some of your technology proprietary? If so, have you filed any patents or any update on the patents?
Yeah, actually, we are trying to develop basically some of it. We are already in the process of filing patents. Some of the patents we have filed, and basically these take time so as to get approval. But basically, there are few patents which are already in the process.
Okay, thanks. We have another follow-up from Hardik Rawat. Please go ahead, unmute yourself and ask.
Thanks for the opportunity. I just had a couple of questions. Firstly, with regards to IT PLI 2.0, just wanted to understand, are you looking at any expedited localization, or are you looking at like a single component localized every year? Any color on that?
Yeah, actually, Hardik, we are already fully compliant on that. Okay, and basically ministry has taken a lot of inputs from us since we are the significant player in that domain. And basically, accordingly, the policy has been designed also, and plus basically they have all our inputs have been really been heard about and they have all been incorporated. We are fully compliant so as to achieve the localization. Actually, some of the things we have already done it, which people will have to do it actually. So we are already on. We are above the track. What exactly has been asked there?
We are ahead of the track as far as PLI 2.0 is concerned.
Got it. And are you seeing clients like requesting, like needing you to, maybe share those incentives, or are you able to keep those incentives for yourselves at the moment, currently?
Up till now, we have not been doing any kind of contract manufacturing as of yet, though we have offers from everybody, but we have been registering all those offers up till now. We have been clearly focusing on our own manufacturing because, our basically our motto is not volume production. Our motto is basically quality and basically the high-end technology development. So we have tried to maintain that. But it may be possible sometime later, basically once everything is done, we may think about basically doing something. But at this point of time, we don't have anything on our own as regards that.
In case you wanted to know that whether customers are keen to ask for share those incentives. So was that your question?
Yeah, I just wanted to understand, do your customers insist on you, maybe sharing, because I understand that you're not in the contract manufacturing business, so it doesn't apply to you that much. But other players, alright, so if contract manufacturing is something that one question with regards to ARM versus Intel, you mentioned that Intel used to have like a 90% market share, which has dropped to 70%, still significant, but it has dropped. Are you seeing any traction wherein clients are, demanding for ARM-based servers over Intel? Because ARM chipsets have increased performance like multifold in the recent times with the Apple M1, M3 chips coming and the latest Snapdragon event. So just wanted to understand what is the performance differential between the best that Intel and ARM have to offer, and are you seeing a greater demand for ARM-based servers as a result?
So basically, as regards, basically what happens is that ARM basically on the enterprise workload is still catching up. Okay, basically if you see whatever you mentioned examples, they are primarily on the client side. But basically ARM, the major advantage you have with ARM is the low power actually. And today what has happened is that if you really understand the technology, the power has become the major significant factor. Today basically the Intel chips are basically a single socket is taking more than 300 watts of power. Same thing is there with AMD. So basically if I have dual socket populated, more than 600 to 700 watts goes only into the processor. Whereas in the ARM basically that is significantly low. So that is there, but the architecture is different. Basically, Intel and AMD, all these are on x86 architecture, whereas this is on the RISC-based architecture. So definitely this will not come into just the run-of-the-shelf kind of a computing architecture. This will be primarily presently being used for specified workloads. Okay, like basically again, generative AI is one area wherein ARM will have a very good say. And basically, since actually you are fully aware, NVIDIA wanted to acquire ARM, but basically was not able to do it because they did not submit permissions. but finally they developed their own processor called Grace. So definitely, and plus they have again, so they are putting a lot of traction around that. And you see most of the world's major generative AI, the new kind of the IT infrastructure which is being planned, those are being planned on basically ARM architecture. So still ARM will take time to become basically generic kind of hardware, but primarily if you really see on the highly compute intensive kind of cases, that will gain a lot of traction.
Got it. That really helps. Thank you. One last question, a quick one. With regards to private cloud, just an indication, an assumption, what do you think, like, what percentage of, firstly, BFSI companies in India, and secondly, big corporate houses, X of BFSI, are yet to shift to private cloud? Because that reflects your TAM in a way.
That basically the TAM for private cloud is very big. Actually, if you really see, basically now if you see any large enterprise, either they are on private cloud or they have to get on private cloud, because that will make more sense. Because going on public cloud is only possible for the organization of a particular size, or they may go there, but they will definitely they will keep on building, because basically the cost is too high, and if they have a lot of compute requirements, it makes sense to go on the private cloud. So basically the TAM is really very high. We are only doing a small part of it, but basically we want to be focused. We are not into the SMB space. We primarily want to focus on the high-end IT company that we have been doing it. As regard BFSI is concerned, basically because if you see the entire public sector BFSI is clearly hell-bent upon to shift to private cloud, because that is the best way how they can really basically use the resources efficiently and can provide the best performance to their customers. And basically, so I'm seeing a lot of, I think there are 4 or 5 RFPs already floating into the market, and few more are actually already into the discussion. So I feel that, as I mentioned earlier, I think I will not hesitate to say maybe 70 to 80% of the public sector BFSI plans will get converted into private cloud without any problem.
Got it. Thank you so much. Thank you so much.
Thanks. We have another question from Nishant Vas from India Infoline. Please go ahead and unmute yourself.
Yeah, hi Sanjeev ji. This is Nishant from 361 Asset. Just 2 questions. One, the number of hirings that you guys are doing, can you just give us a sense in terms of which segments, which verticals are you doing more on the front end sales and marketing side hiring, or you're doing more on the R&D and development side? Like, what is the mix like?
I'll let Praval answer that.
So the hiring is a mixed hiring. So majority hiring will go into sales, marketing, and R&D team.
Okay, so I presume that's where the funnel acceleration is coming through. So that's good to hear. Second,
both the departments are important for us, and both keep on fighting that with the HR that you are hiring more for, they are giving them more attention, you are giving them more attention. So basically that's the issue here.
Yeah, good problem.
The market is also expecting us to, reach out to more and more organizations in the industry. So they expect us to, have, that's the reason we are also adding up more people, so that, since the market is welcoming our solutions, they are welcoming our products with open arms. So definitely this is the, opportunity and the time for us to expand as much as possible. That is the intent behind, adding up more people on the R&D as well as on the sales and marketing side.
Understood. And my second question was on effectively you talked about the AI side and the LLM side. I think that was the first time you mentioned that portion of the government on their presentation. But is there still that hardware challenge to acquire hardware from the large guys globally, at least on the AI workloads that you see globally, whether it is A100, H100, you clearly have a shortage of supplies. Is that one of also our reasons where you think that sourcing and getting those hardware in probably is going to take some time? That's why you expect more acceleration, say next year. Is that the right reason or?
Not really. Actually, definitely, because basically NVIDIA chips are in shortage worldwide, whatever it may be. But definitely we get preference over that. Overall, we are able to still service our customers. Recently only we have executed some of the large orders for Indian intelligence using basically for large amount of GPUs. So we got out of priority basically allocation. But basically, the thing is that so we, as regards, I don't think that is the primary reason. The primary reason is because in the ARM side, please understand, it's a completely ground-on approach. Wherein the entire board is being designed by us, everything is being done by us. So that takes time. So, so I think that is the design work and the SMT, everything is being done locally in India. So that is the process where it is taking time. And it's an enterprise workload kind of a machine. The entire reliability and everything has to be checked. Then the application optimization has to be done. You understand that currently H100s and 800s which you're talking about, they have been deployed in x86 machine. Whereas basically on the ARM side, once it goes, it will go into the REST architecture. So the application stack has also to be supportive to that. So all those things are the factors which will be there. So that's the reason we are projecting that. But I will not deny the fact delivery for NVIDIA chips has been a problem, and basically I think, and that actually makes it more exciting for us that the demand is building up actually worldwide.
Great to hear. And sir, if you're not restricted to give some details in terms of what is the programs on the government side, the generative AI that you guys are working on, if you can shed some perspective in terms of what are the use cases that are being evaluated.
On that, I am restricted. We are working on some large things, but basically at this point of time, I'm not allowed to share that information.
Okay, no problems. Thank you and all the best.
Yeah, we can have a last question due to restriction on the time that is coming from the chat box. Given we are coming with new segments and Intel partnership, can we expect an increase in the margin to about 20%, or we are looking at 16% kind of margins? And sir, second question from my side, what is the reason for a material decline in creditors in terms of why such an accelerated payment to creditors in this quarter?
Yeah. As regarding the creditors payments, so most of the outstandings have been cleared during this quarter, and you will also notice that creditors built up which we have promised. So we have come to around that number of days on the outstanding part from creditors. So we have around 60 days credit period from the creditors. So our creditors going forward will hover around that days only. So whatever has been built up, that has been cleared up. So that has led to a reduction in the creditors days.
Because margins actually, we would like to still commit that basically we are serving the large enterprise and the matured part of the industry, which I have been telling from day one. So definitely we can command more margins, but basically we are looking at a customer with a long-term perspective, wherein more and more they use us for their newer solutions, newer kind of products and all. So definitely we don't believe in overcharging our customers at all. And basically the margins will remain in the tune what we have projected, and maybe Prabal can say.
Yeah, so gross margins I have already indicated that will go around to 27.5%, or you can say between 27 to 28% range, and that has been the guidance. And going forward, we are also looking to maintain the margin at the same rate.
Okay, thanks. I think due to time restriction, we need to end this webinar, and thank you all the participants, senior management of Netweb and Mr. Sanjeev for attending the webinar. We can now end this webinar and leave the same. Thank you all once again.
Thank you.
Thanks a lot for the time. Really appreciate it. Thanks a lot.